Hi everyone and welcome to today's morning report on Thursday the 17th of September with me, Rich Perry, market analyst at Handtech Markets. It is Fed Day, and this is the day that the Fed FOMC will make a decision as to whether to raise rates or not. Now the market is pretty much entirely split. Pretty much you could watch all these financial news channels and read financial copy, and everyone comes out with a different view. But at the end of the day, it doesn't look as though that they're going to raise rates at the moment. 30% chance is what the Fed funds futures are pricing in, just around about 30% chance of a rate hike today. And it's interesting because we're seeing equity markets still pretty strong actually. Had a big jump on the FTSE yesterday. You're actually seeing markets to a certain extent looking to break out. You saw the S&P 500 sort of up another 0.8%, seemingly sort of breaking out from a near-term range. Interesting that this almost risk-on appetite has come as the market has approached this FOMC announcement. Now, what we have seen is this also this mixed outlook on markets, because you've got bond markets, you've got the treasury yields which broke out this week. Interesting that on the 10-year and also the 2-year, big breakouts on those markets, which would suggest that there is a possibility of a rate hike. But equity markets pushing higher, even the forex markets are sort of seemingly pushing for a bit of a no move on the on rates. So these markets are very mixed at the moment, and no real decisive moves or no real sort of decisive signals either way as to which way we're going to go for tonight. 7 o'clock we're going to have some massive volatility, you'd imagine. A rate hike would certainly strengthen the dollar, and you'd see euro dollar back at 111, perhaps even below, likely. And also you'd see big corrections on cable as well. You'd probably see a break to the upside on dollar yen as well, things like that on a rate hike, and possibly even equity markets coming under pressure as well. But interestingly enough, it's difficult to say at this stage whether a rate hike would be deemed positive or negative for sentiment, because we have the potential for it to even be, in inverted commas, a dovish rate hike, whereby the dot plots and the path of the Fed future rate hike or Fed future interest rate rises would be quite shallow. The market would deem that as to be quite a positive move in terms of normalization, but at a slower rate. So it's very difficult to know exactly how the market is going to take this decision tonight, and I think subsequently we're going to see some significant volatility around the moves. There are economic releases out before that. You've got the UK retail sales coming out very soon, expected to come in at 3.8, slightly down from last month on the year-on-year data, but still pretty strong there. And then into the US decisions, we've got the building permits at 130, 1.16 is the expectation there, so still pretty strong on that. You've got the housing starts expected to come in slightly down, but still strong at 1.17. And also the weekly jobless claims, again pretty much around this 275 level is the expectation there. And finally the Philly Fed, which is at 3 o'clock, and it's expected to come in at 6.0. So no real sign of a pickup in sentiment there on the Philly Fed, but certainly the FOMC tonight at 7 o'clock UK time will be the big focus for markets. You could well see some consolidation in front of that. In fact, you're seeing equity markets basically trading around the flat line at the moment, but holding on to those gains that we saw yesterday. And that takes me to my chart of the day, which is the Aussie. This is one currency that certainly has seen. That's not the Aussie. Sorry, that's the Aussie. This is one currency that certainly has seen a recovery in the last week and a half. I spoke last week about a small base pattern on the intraday chart. A small base pattern here, head and shoulders reversal, that actually gave us an implied target of 71.50, and that hit that target, and that target has now been achieved. But certainly the move has now broken the downtrend on that Aussie that's been in place since May. breaking that downtrend, but it's now back up into a really key level of resistance. This overhead level between 72 figure and 72.60 is a big level of resistance, and not only that, you're seeing the RSI back at levels where the rallies tend to fall over around that sort of 50 point or low 50s. MACD lines are still just unwinding really, so it's almost gets to a stage at which this rally on Aussie is pretty pivotal at a pivotal level now, and I think that obviously coming in timing with the FOMC decision, we could see a big move either way, and that would change the outlook if it was higher. Certainly, the outlook is still in a negative mindset. All the moving averages in decline, and this is now testing that decline because obviously the downtrend has been pretty strong on the Aussie, and rallies have been used as a chance to sell. So if this move can go above 72.60, I think that would be a pretty strong move. Now this is the hourly chart. Probably today we're seeing a little slight sort of correction into this FOMC, but there is support that comes in certainly. 70.80 is your first real support that comes in, but there's minus levels of support that you could argue around sort of the 71.50 area towards 71.70, which is pretty much where we're seeing it now. So that is your first line of support, but I think the FOMC would obviously have a big impact on this chart and could well decide whether we're going to get a near-term rally continuing on this Aussie. Certainly, if there's no rate hike, then I would say that we're going to get a continuation of this rally higher and possibly even to test that high at 74.40. So I wish you good luck in your trading on the Aussie today, and I will speak to you later. Thank you.